Thanks for checking out this video from NetPicks, and today we're going to talk about the 5-minute opening range breakout. The good thing about the opening range breakout is it actually takes advantage of probably the most important part of the trading day. The opening price of an instrument can actually point to the character of the rest of the day. Okay, but that's not the best part. Data actually suggests that the opening print of the day will also be near the higher low of the session. Now, of course, it's not 100% true for every single trading day, but it actually occurs often enough to be significant. So that could lead to the conclusion that the opening price shows something other than random price action, right? That it has real meaning. Traders will also have a defined entry level, as well as a protective stop loss level to manage risk when you're using an opening range like the 5-minute, right? There's no guesswork involved. So what is a 5-minute opening range breakout? Well, as you probably have guessed, we're actually looking for price to break out of the range of the first 5 minutes of trading. So essentially, traders, you're going to sit on your hands, okay, while the overnight action's dealt with. When the opening happens, right, including the gaps. So as your chart starts to approach the 5-minute mark, you'll begin to mark off the high and the low of the day's range so far. So why do we use 5 minutes? Look, there was a time when 30 minutes and 60 minutes, those breakouts are really, really popular. But now we live in a time where market data is fast, internets are fast, and we actually have really quick entry methods for trading, right? So traders start to opt for the lower time frames. One of the biggest benefits from that is someday when the character of the instrument is set off the open, right? So if you enter near the open on a strong trending day, it's a wonderful way to actually book your profits. Now, there's also traders who use a short time frame as an entry on a higher time frame setup, and I actually discussed that in the video that I've just linked above. Let's take a look here. This is a 5-minute chart of Pinterest for January 31st, 2022. We just simply define our opening range by marking off the high and the low of the initial candlestick. So assuming that you're bullish on Pinterest, you would just take an upside breakout. You would ignore any downside break. Now there's a lot of different ways to trade the opening range breakouts. Okay, you can play the actual break of the range. You can look for a continuation in the price action. Each trader is going to have to define their own intricacies of a trading strategy. Okay, but you do have that foundational knowledge that the opening price does have some sort of significance. So if we consider just playing the breakout, what strategy are we really playing? Well, we're essentially playing a support holding or resistance trade, right? So think about it this way. Each high or low of a candlestick, you can consider that to be a short-term support or resistance zone. Some zones, they're going to appear stronger just simply due to the size of the upper or the lower shadow. Now, there are ways to determine if a breakout has a higher probability of working out. And I talked about those in the video, Secrets of Trading Breakouts, and that's linked above as well. Essentially, there are price action clues that you can consider. So oftentimes what happens as well is price will break a range and pull back. This is just the normal ebb and flow of price action. And that just adds another strategy that you could consider using. So let's call this range breakout strategy number 1. And for this strategy, we're going to use a 1-minute chart, but we're going to wait until the 5 minutes has elapsed. So why am I using the 1-minute chart? Well, we could just trade the break of the 5-minute range. But what's wrong with looking at price action that's leading up to that 5-minute? Let's go back to the pins chart. Now it's a 1-minute chart. I just put on a 10 EMA, just an overall direction of the short-term trend. Okay, so let's break down this chart. We see that price gapped up in the morning, and it put in a high at 9:33 in the morning. But we still need to wait a few more minutes, right? Price backs off from the high, but it stays just below resistance. That's actually bullish. You see price break above the high, that's the arrow, but it doesn't close above the 5-minute high. we would enter a long position when that first candle closes above the range. Stop loss just goes below the low of the range. And we're talking about profit targets. You can use a fixed target at 1.25 times your risk, 1.5 times your risk, 2 times your risk, whatever you want. Or you can actually use the moving average to trail your stop. It's up to you. This next chart, session only, crude oil futures. It's the 1 minute chart, February 1st, 2022. And I think it's a really great example of a different approach you can take for breakout trades. And it's not a cherry-picked example, right, to make this look golden, but it shows the reality of trading and what you're going to face on a daily basis. So we see price gap down, right? So we let the first 5 minutes play out. And unlike the pins chart, price had actually pulled back off the low, that's the PB, of the 5 minute range. So now price would have to drop at least 23 cents to get back to the lows. But this pullback gives us an opportunity to actually enter before the breakout. Now, there are plenty of ways you can enter a reversal. In this instance, we actually have an inside candlestick. We can short the low of that. Right? Remember, we're anticipating the breakdown of support of this 5 minute range. This just gets us in early. If you decide to trade the pullback kind of entry, our stop loss would just go above the high point of the pullback. Why there? Well, that's the proper location when you're trading these kind of patterns. In this case, crude oil actually made a measured move into the lows, and then it began to trade in a range. Let's take a look at forex. It's a 1 minute candle chart. Remember, we're still looking at 5 minute ranges. Now, remember, forex is open 24 hours. We actually want to look to the opening of the higher volume sessions. In this case, this is an example of the US session, and this is the Euro Japanese yen. It's interesting to note that price action was actually contained inside the 5 minute range for about 20 minutes. That black arrow, we get a strong close above the range. After a slight pause, price moves to the upside. But I want you to also note that price is actually making higher lows into resistance as well as ranging just under resistance. When you combine all that, it points to a bullish breakout of the 5 minute trading range. Now, yeah, you can keep it simple. You can just watch the 5 minute chart and trade that. But in my opinion, if you have the ability to obtain more price information by looking at the 1 minute chart to increase your odds, it makes sense to do that. Now, there's going to be times as well when price gaps at the open. And learning what gaps are and which ones they are and how to trade them, that's another tool for a trader as well. Let's call this range breakout strategy number 2. And if we agree that most breakouts fail, then letting price break out and then have a reaction move might actually suit you better. So think of it this way. Traders enter at the open of the market when price is moving directionally, right? So it's trending. At the first sign of a pause, these traders will exit. We can also get traders involved that are looking to play the opposite direction, right? So a reversal. So when you wait for the pullback to an area around the higher low of the range, and remember, that may never come. Prices may break out and keep running. But by doing that, you actually position yourself after the market has digested trade entries and trade exits. This is a 5 minute chart of ticker AARK, February 1st, 2022. So we see that price is broken through the range low. So instead of entering a trade, you just wait until price retraces to an area around the breakout area. We see it. The green candle pulls back. And the red candle that was initially a green candle is the entry. What does that mean? The red candle was originally a green candle. Remember, because we got a new high on that red candle, it had to be green at one point as it moved up off the opening price before it reversed. So traders could, depending on the pullback, enter the trade when the candle breaks back below the moving average as well. This is CRWD, crowd, and intentionally, it's not a good example. Price breaks down. We see the pullback occur, but it just keeps on going into the middle of the range that was formed at the open, the 5-minute range. So as a trader, you're going to have to determine what the character of the pullback looks like that you'll trade. So is a pullback close to or at the range level? Is that good enough? How far can price travel back into the range before it invalidates the setup? Right? You have to decide these. And remember, as you answer these questions, we're looking to take advantage of the momentum in the early morning. Right? So a price can pull back, as shown in this example, form a range. Are we really looking at momentum? If we want to take our strategy to another level, we can actually incorporate support and resistance zones. So looking back at the crowd chart, the CRWD, you can see the initial breakdown ran into an obvious support level. That's what we're looking at here is just price discovery, right? Price tested both the high and the lows of a larger range. So what started as a 5-minute opening range breakout strategy, once it broke to the downside and found support, now we're looking at trading a support holding setup, looking for a bounce. Right, so I think it's really important that traders have a few different trading strategies to take advantage of opportunities such as these. So the takeaway really is to monitor the chart, see if there is a support or a resistance level close to your entry point. And if there is, are you going to take quicker profits? Are you just going to skip the trade or just ignore the level? Profit targets and stops. Taking your profits, just like you're placing stops, it has a lot of different approaches and it's going to be different for each trader. So think about it. For these strategies, the worst case scenario is you enter a trade, price reverses right away, takes you out. That's why to manage our risk, we want to place a stop at a point that will invalidate the trade. Playing the breakout, it's going to have your stop at the other extreme point of the range. If you're using pullbacks, your stop's going to go at the turning point of the pullback. What's the best case scenario? Price just takes off as the market trends. You could use the 10 EMA as a trailing stop loss. You can use multiples of your risk as a target. You can look for price action reversals and exit when the momentum stalls. The point is, whatever you choose for profit and protective stop loss, just be consistent with every trade that you take. And I'll be honest, there's too many videos and too many websites that makes these trading strategies seem really easy to do. But the fact is, they're not easy. The criteria is actually simple. However, as we looked at in the support and resistance area, we talked about that. Your approach to a trade is going to change. Price can do a few things. They can go up, it can go down, it can go sideways. You have to understand the difference, and you have to have techniques to handle each of those, even if it's just sitting aside. With the pullback, how far is too far? So you want to learn how I look at pullbacks. I linked a video above just how I trade pullbacks. And that there's actually a criteria that you can use to ensure that you're not entering when price is looking to reverse. And it's in that video. What should you trade? You can scan for instruments, but I've always found it best to have a list that I trade on a regular basis. In fact, if I know some news is coming out for a particular stock or we've had earnings, I can keep that ticker on the top of my list to watch for on that trading day if I was looking to trade an ORB trade, opening range breakout. Another great thing about the 5-minute chart is it gives traders a disciplined approach to how you frame the market, right? You have a defined zone, that 5-minute range, to look for a trade, right? And it's actually a zone that has meaning, as we discussed earlier. So how can you get started with this? Pick one of the 2 strategies that I talked about. Go over some of your charts. Map out some criteria that you want to watch for. Just see what suits you as a trader, because it's going to be different for all of us. Hit like, hit subscribe. Any questions or comments, pop them below, and I'll get back to you.